Welcome back. Regional stock markets are set for gains this week, reflecting the recent developments in Egypt and also on further signs that the US economy is recovering. To speak about the subject, we are now joined by Ali Taqi, Director of Asset Management at AT Capital Management. Hi, Ali. Welcome to the show.
Hi, Linda.
Now, tell us, on the first day of the trading week, what is it worth looking out for this week?
Okay, maybe I should start by saying that, generally speaking, short-term market movements are difficult to predict. But when you begin to take a longer-term perspective, think with a bit more rational, the picture becomes different. Now, this week, the resumption of trading in the Egyptian equity market is an event that is worth keeping an eye on.
When is that?
On the 16th. And basically, at this point, it's a mixed bag between bargain hunters on one hand, and on the other hand, you have people that have had the exposure to Egyptian equities, and they think the investments have done well, and probably it's time to lock in some gains. Now, having said that, the region as a whole, at this point in time, there's some political uncertainty and contagion effect, the risk of contagion effect. Think Algeria, Yemen, to a certain extent, Jordan. So basically, and the way we think Egypt today, there's still quite a few variables that lack visibility. And if you begin to compare the visibility in Egypt compared to GCC, we think on relative basis, GCC has better visibility and therefore could be a better ground for investments, not to mention the markets are open. So.
Let's look at one company in specific, that is Emaar Properties. Last week on Thursday, when the markets were already closed, they posted results. Fourth quarter earnings dropped quite significantly, more than expected, because of write-downs and impairments. And analysts say there's more to come when it comes to impairments. What is your take on that?
Let's take a step back and think about the following. Still, a lot of investors remain focused on impairments, write-downs, provisions, non-performing loans, and asset quality in case of banks. But what the point we're trying to make here is you can only write down an asset to zero. You cannot write it down below that. So people have, or investors have, completely neglected the improvement at the operational level. And over time, you would see as provisions become lower and reach normalized levels, you'll begin to see there will come a point where operational earnings or operational income of companies will take center point or center stage. And I think those companies with real operations and real income growth will begin to be rewarded. So Emaar is a great example where at the operational level, the company is doing well. The deliveries in Burj Khalifa, their hospitality segment, leasing business, were all doing fine and so a nice growth in 2010. Yet the bottom line of the company, the net income number, was masked by these impairments in Amlak and another local bank. So if you look at the share, the stock performance today, if this drop was at the operational level, rest assured the market reaction would have been totally different. And I think that the fact that Emaar was closed in the green is an indicator that people are beginning to focus on the actual business and the operational earnings of the company, not so focused on provisions, because they know as time goes by, these provisions will subside.
The earnings season is slowing down. It's nearing its end in the GCC region, also here in the UAE. Where will the market get its impulse from in the coming weeks?
Fourth quarter earnings are interesting. On one hand, on the operational level, most of the times you don't have surprises because you already know what the company has done for 9 months, and really the remaining 3 months or the last quarter are not too difficult to expect or predict. On the other hand, a lot of companies look at accounts closing for the year as the time if they want to take any provisions or cleanup or some major events could take place from an accounting perspective. So far the results we have seen some surprises, but for most part they've been in line with expectations. And I think going forward for this year, you'd have to focus on a few things. For instance, infrastructure development in Saudi, Qatar, and Oman. You'd have to begin to focus on announcements of the government, of these big contracts, who are winning these contracts, and actually what banks are financing it. Are we seeing trickling down effects, or these are just numbers and it will take some time before we begin to see implementation?
How do you view the GCC region at the moment? Where's potential?
GCC region, we look at themes and trends. We try to identify themes and trends and then find ways to capitalize on those. So if we were to quickly highlight those, I think infrastructure government spending is a theme that we like to play. We see it in Qatar, Oman, and Saudi Arabia. Retail spending is another trend that we like to play. You also have middle-income housing in Saudi and in Oman, and then you have quite a few companies related to each company's first-tier direct plays and indirect plays that we would think would do better in the coming 2 to 3 years.
Thanks for your time, Ali. Have a good day.
Appreciate it. Thanks.
Well, that's it from the business desk. Up next, Laura Buckwell is back with the news.